Welcome to the Deep Dive by Talk Tickers, where we break down the earnings calls that matter. Today, we're really getting into the Q1 2025 call for Arvinas.
Right, a biotech company that's been through some pretty interesting strategic moves lately.
Exactly. It's a fascinating case, actually. You had these strong reported financials, but then, bam, a really tough market reaction.
Yeah, it really highlights the complexities in biotech, doesn't it? How investor sentiment works.
It does. So let's start with those headline numbers for Q1. What did Arvinas report?
Okay, so GAAP EPS came in at $1.14, which, sounds good on its own.
Good. That sounds like a massive beat compared to the consensus. Wasn't that like negative DL 97 cents?
Precisely. A huge beat on earnings. And revenue is the same story, really. They reported $188.8 million.
$188.8 million. Wow. The consensus was way lower, around $42 million, wasn't it?
That's right. So a really substantial jump compared to expectations and a huge year-over-year increase as well.
Okay, so numbers look fantastic on the surface. But what happened with the stock?
Yeah, this is where it gets counterintuitive. Despite those seemingly great numbers, Arvinas shares just tanked.
Tanked how much?
Dropped about 31% on the day of the call, and the trading volume was way up, indicating, strong conviction behind the move.
31%. Okay.
Right.
So that revenue beat, that huge number, $188 million.
Yeah.
What was behind that? Was it product sales taking off?
Well, no, not exactly. And this is the critical piece of context. That big revenue number, it was mostly an accounting impact.
Accounting. How so?
It stemmed from changes to their collaboration agreement with Pfizer. Specifically, they removed some planned phase 3 combination trials for their lead drug.
Ah, okay. So less about booming sales, more about changing plans and how that hits the books.
Exactly. And that sets the stage perfectly for the deeper story, the strategic shifts that really spooked the market, it seems.
Right. So let's unpack that strategic pivot. It sounds like that was the real driver here, not the financials themselves.
I think so. The core of it revolves around their lead drug candidate, vepdegestrant, or VEPD.
Okay, VEPD. Now, there was actually some really positive news on that front clinically, wasn't there?
Absolutely. Huge news, in fact. Vepdegestrant delivered the first ever positive phase 3 pivotal data for a PROTAC degrader. That was in the VERITAC-2 study.
First ever. That sounds significant. Remind us quickly, what's a PROTAC?
Sure. PROTACs, proteolysis targeting chimeras, they're a really innovative approach. Instead of just blocking a problematic protein, they basically hijack the cell's own garbage disposal system to specifically tag and destroy disease-causing proteins.
So destroying the target instead of just inhibiting it. Got it.
Right. And getting positive phase 3 data for one, especially VEPD in this case, is a massive validation for the whole platform technology. They're moving towards global regulatory filings now.
A monumental scientific win. So what was the strategic shift that caused the trouble?
The shift was that Arvinas, working with Pfizer, decided to focus vepdegestrant development primarily as a monotherapy.
Monotherapy, meaning used on its own.
Correct. Specifically for patients with ESR1 mutant metastatic breast cancer in the second line and later settings. So patients whose cancer has progressed after initial treatments and has a specific mutation.
And focusing on monotherapy meant?
It meant discontinuing 2 previously planned phase 3 trials that were going to test VEPD in combination with other drugs.
The trials linked to that revenue accounting change.
Exactly. And just for context, the FDA did accept their new drug application, the NDA, for vepdegestrant last August, based on that positive monotherapy data.
So why narrow the focus like that? Especially right after proving the drug works in phase 3. Seems like you'd want to broaden its use, not narrow it.
Well, the company cited a few reasons: discussions with health authorities like the FDA, also looking at emerging data from other trials in the breast cancer space. It's evolving very rapidly. And, broader thinking about where the treatment landscape is headed and how best to allocate their capital long term. Their view seems to be that these types of drugs, ER therapies, will likely be mostly used in that specific ESR1 mutant population in the later lines of treatment.
So making a bet on where the market is going, essentially, focusing resources there.
Pretty much. Streamlines development, saves cash immediately.
Right. We'll get to the cash savings. But it also reduces the drug's potential reach, doesn't it? Fewer combination options, maybe smaller peak sales potential?
That's exactly how investors seem to read it. That loss of optionality, the potential for VEPD to be used more broadly or in earlier settings through combinations, that seem to outweigh the positive clinical data and the immediate financial benefits in their eyes.
It's that classic biotech tension, focus and de-risk versus maintaining broader potential.
Absolutely. Optionality is often priced in heavily. Cutting it, even for good strategic reasons, can trigger a reevaluation. It's not just about having more shots on goal, it's about the size of the potential market you're aiming for.
Even so, Arvinas still seems to think the focused opportunity is pretty big.
Oh, definitely. They estimate something like 16,000 to 25,000 new patients each year in the US and Europe fall into that specific 2L plus ESR1 mutant metastatic breast cancer category.
So still a significant market, and they plan a very targeted launch for it.
Yeah, focusing on the key oncologists who treat these specific patients.
Okay, now, tied into all this strategic shifting was another major piece of news, a corporate restructuring.
Yes, a significant one. They announced a workforce reduction, cutting about 1/3 of the company.
A third. That's substantial. What's the financial impact expected to be?
Well, the direct cost savings are estimated around $80 million in annual operating expenses, expected to be fully realized by Q4 of this year, 2025.
$80 million annually. And what about the impact of canceling those two big VEPD trials?
That's where the really big numbers come in terms of cost avoidance. They project avoiding about $350 million to $400 million in spending over the next, say, 3 to 5 years by not running those trials.
Wow, $350 to $400 million saved. That's huge for a biotech.
It is. And the direct consequence of all this, the restructuring, the trial cancellations, is a much longer cash runway.
How much longer? What's the new guidance?
They've updated it to say their current cash position is expected to fund operations well into the second half of 2028.
2028. That's a lot of breathing room in this industry.
Yeah.
Reduces near-term financial pressure significantly.
Immensely, especially when you need time for your pipeline to mature.
Right. Speaking of the pipeline, this isn't just about vepdegestrant, is it? They have other PROTACs moving forward.
Yes, and that's important. It shows the platform isn't just a one-trick pony. They're applying it in other disease areas.
Like what? What else is cooking?
Well, there's ARV-102. That's their LRRK2 degrader targeting neurodegenerative diseases like Parkinson's.
LRRK2. Okay.
Yeah.
How's that progressing?
Early data, first in human, was quite promising. Showed the drug could cross the blood-brain barrier, which is a major hurdle for brain drugs, and actually degrade the LRRK2 protein in the central nervous system.
That is a big deal. Getting drugs into the brain is notoriously tough. Yeah. Any updates expected soon?
They said updates in Parkinson's patients specifically should come later this year, in 2025, so one to watch.
Okay. What else beyond neurology?
They're also in oncology with ARV-806. This one targets a KRAS mutation, G12D specifically.
KRAS G12D. Yeah. That's known as a tough one to drug, right? Found in some really difficult cancers.
Exactly. Pancreatic, colorectal, lung cancers often have it. They got the safe to proceed letter from the FDA, so phase 1 trials should start in the second half of this year.
And the preclinical science?
Preclinical data looked good,
Yeah.
Showed high potency, and suggested it might be different, potentially better than existing KRAS inhibitors. Early days, but encouraging.
And there was one more, wasn't there? Something in hematology.
That's right. ARV-393, targeting BCL6 for blood cancers like non-Hodgkin lymphoma.
BCL6. Involved in B-cell development.
Correct. Dysregulation is linked to lymphomas. They expect initial phase 1 data in lymphoma patients by the end of this year. And again, preclinical work showed it might work well combined with standard treatments.
So VEPD is the lead, but there's definitely activity bubbling underneath in different areas. Neurology, other oncology targets, hematology.
Yeah, it shows the platform's breadth. But coming back to the market reaction.
Right, that 31% drop.
It really underscores that beat but down scenario. Investors seemed laser focused on that perceived loss of upside, the narrowing of VEPD's potential through combinations.
More so than the actual positive phase 3 data, the accounting-driven beat, or even that much longer cash runway into 2028.
It appears so. It really speaks to the psychology of biotech investing, where future potential and, well, the story can sometimes dominate the present facts.
And you have to put Arvinas' situation in the context of the wider biotech sector too, right? It hasn't exactly been smooth sailing for the industry.
Not at all. If you look at the XBI, the main biotech ETF, it's lagged the broader market significantly over the past year or so. Lots of pressure.
So Arvinas' stock performance, while partly driven by its specific news, also reflects that tough industry backdrop.
Definitely a factor. So, looking forward, what should people be watching for? What are the key catalysts?
Well, clearly more updates on vepdegestrant, regulatory progress, maybe more detailed data disclosures. They mentioned an ASCO presentation in late May, inclusion in Bust of ASCO. Those are important visibility points.
Right. And then the pipeline updates we just talked about. Clinical data for ARV-102 and Parkinson's later this year.
And seeing ARV-806, the KRAS G12D drug, actually get into phase 1 trials in the second half of 25.
Those are the data points that could potentially shift the narrative and maybe get investors looking beyond just the VEPD combination changes.
So for you listening, Arvinas really presents this classic biotech dilemma. How do you value a company that achieves a major clinical win with its lead drug, extends its cash runway significantly, but also narrows its immediate strategic focus?
It really forces the question, what's worth more? A clearer, de-risked, but potentially smaller market for your lead asset, or a broader, maybe riskier, but potentially much larger development strategy?
No easy answers there. Okay, let's pivot slightly.
Yeah.
We know some of you listening aren't just tracking the news, but also thinking about market positioning. So we have our regular segment next.
Ah, yes, the what if corner.
Exactly. Remember, everyone, what follows is purely for informational and entertainment purposes. It is absolutely not financial advice. Please do your own research and consult with a professional. This is just a thought experiment.
Absolutely. Standard disclaimer applies. Okay, so looking at Arvinas post-sell-off, my take. That 31% drop feels like an overreaction.
An overreaction. Based on what?
Based on the fact that they did significantly de-risk vepdegestrant's path to market in that core 2L plus ESR1 mutant group. That drug is moving towards approval. The market seems overly focused on the lost potential combinations rather than the secured monotherapy path.
And the fundamentals are stronger now, you'd argue.
I would. The cash runway into 2028 is huge. It dramatically lowers the near-term risk of needing to raise money, which is always an overhang for biotechs. And the pipeline, as we discussed, is showing real promise, validating the whole PROTAC approach.
Okay, so if someone felt it was oversold, how might they think about positioning, hypothetically?
Hypothetically, one strategy that comes to mind for this kind of scenario where you think the stock is undervalued and might recover moderately over the longer term is something like a bullish butterfly spread.
A butterfly spread. Okay, using options.
Yes, using longer dated options, maybe looking out to the 2026 or even 2027 expiry cycles for the ARVN ticker.
And why that strategy specifically?
A butterfly is designed to profit most if the stock price lands within a specific defined range by expiration. It limits your potential loss, but also caps your potential gain. It's not a bet on the stock going to the moon. It's more a bet on a recovery to a, let's say, more rational valuation, so more moderately higher than where it is now after the drop.
So less risky than just buying calls outright, perhaps.
Generally, yes. It has a defined max loss, usually the net cost to put the trade on. The rationale would be VPD's path is clearer. Maybe it becomes the first PROTAC approved. The cash runway reduces dilution fear. And the pipeline catalyst could provide upside nudges over the next couple of years.
Can you give a quick example structure? Still hypothetically.
Sure. A simple bullish call butterfly might involve buying one in the money call, say a January 2027 $5 strike call, selling two at the money or slightly out of the money calls, maybe the January 2027 $10 strike calls, and then buying one further out of the money call, like the January 2027 $15 strike call.
Buy one low, sell two middle, buy one high.
Exactly. The max profit occurs if stock price is exactly at the middle strike, $10 in this example, at expiration. It's a way to play for that moderate recovery, acknowledging the market's overreaction, but defining your risk. And if the broader biotech sector recovers, ARVN could benefit disproportionately, acting as a higher beta play.
Interesting. A calculated way to look at a potential rebound. Again, folks, just an idea, not advice.
Not advice, just spitballing based on the scenario.
All right, so wrapping up our deep dive today on Arvinas' Q1 2025. We saw a company making some really bold moves.
Yeah, balancing that big VPD win and a growing pipeline against some tough but necessary decisions on strategy and cost. Focus and discipline were the themes.
And a market that reacted, well, strongly to the perceived trade-offs.
Which leaves us with that final thought for you, the listener, to chew on. In this world of biotech, where potential is everything, how do you value that clear, de-risked path for a lead drug when it comes at the cost of maybe broader but more speculative future options?
A fundamental question indeed. Where do you place the value? On the bird in the hand or the two in the bush?
Something like that. It's the constant calculation.
Well, thank you for joining us on Talk Tickers for this deep dive. As always, the information we discussed is for educational purposes only. It's not financial advice.
Do your homework.
Absolutely. We hope you'll join us next time as we unpack another earnings call.